meaning a loss of momentum from the buyers in the market. Now, going the other way.
Let's see.
You first have your moving downtrend. Price then makes two same. The bottoms essentially make a support level. This swing high here forms the neckline. Now, what does the double bottom tell you in terms of price action? Price failed to make a lower low, but instead made a same low, which shows a loss of momentum from the downtrend, meaning a loss of momentum from the sellers in the market. So this then brings us to our next question, which is, how do we use the double top and double bottom pattern as part of our overall strategy? Also, right now, go to the comment section below and tell us exactly what topic. So moving on to the second variation, a double top or double bottom pattern forming at a key level.
Let's discuss it here. An
Now,
example.
this is an entry that occurred on Ethereum and one that many of our members took. So you first need to identify a key level,
Walmart,
which you have
you
through
see
these
went
three
down,
reversal
went
points.
up.
As price comes back down, it creates a double bottom pattern at the support level. So again, to confirm the reversal, neckline placed at the recent swing high, and once price breaks through the neckline and makes a higher high, your trend change from a downtrend to an uptrend is confirmed, and you would then take trade entries long through the lower intraday timeframes. Now, to point something out, there was another trend change confirmation which was placing a trend line like this, connecting the swing highs, and again, waiting for the breakthrough before looking for trade entries
It's good.
long.
That's why we said
Now, going the other
sell
way.
cash secure puts.
Again, you first
For
need to
550.
identify a key level, which you have through this reversal point here,
It
giving
went
you
up.
your resistance level. As price comes back up, it creates a double top pattern right at the resistance level. So again, to confirm the double top reversal, neckline placed at the recent swing low here, and once price breaks through the neckline and makes a lower low, your trend change from an uptrend to a downtrend is confirmed, and you would then take trade entries short through the lower intraday timeframes. This is also a very good example of the many different opportunities there are to enter trades. Some would have entered short right at this point here. Others would have entered short right at this point here, where pattern traders wouldn't enter until the double top pattern formed and then the break of neckline here. All are correct. There are multiple different ways to enter trades based on your style. So what does the double top or double bottom pattern at a key level tell you from a price action standpoint? This kind of entry is of higher quality because you're not just trading a pattern on its own, but a pattern that is also at a key level, which means you also have support and resistance traders looking to enter along with pattern traders, which helps create momentum for the trade and increases trade quality. So moving on to the third variation, a double top or double bottom pattern, but instead of taking the breakout entry, waiting for a pullback entry. So back to the Ethereum example we just covered. You had your double bottom pattern, neckline break, but instead of taking the breakout entry, there was a second long entry on the pullback to the new support level. This is actually a very good level because it was formed way back here. Now, there is a very specific way you must place your stop loss when taking breakout entries, but then a very different way you must place your stop loss when taking pullback entries. So moving on to the fourth variation, candlestick patterns forming at a key level and then a double top or double bottom pattern inside of those candlesticks. So you first look for a key level, which you have through this reversal point here, which gives you a level of resistance. As price comes back up to this level, you were waiting to see if you would get candlesticks forming at the level to show a reaction to the level of resistance, which you got through this long wick candle. But a reaction does not equal a trade, as price can stall at this key level, form the candle, and still break right through. Don't forget that this is a very strong uptrend. So what you need to do is after you have your long wick candle react to the level of resistance, you need to look inside of this area on the lower time frames to see if you can get any form of price action that signals a trend change from an uptrend to a downtrend. Now, this is a very key point. Before you look inside of this area, you have no idea what you will find or if you will find anything at all. So let's pull up a lower time frame, specifically the 6-hour time frame, and put it beside this one. So on the left is the daily time frame we just looked at. And on the right here is the 6-hour time frame of the same asset. This resistance level here is the same resistance level here. This area here where the candlestick formed is this same area here on the 6-hour time frame. Now the reason we are using a lower time frame is because on the main time frame where we found the initial setup, price movement is
Let's discuss right now an example. Let's see. And don't forget, go subscribe, give like to our videos. We have different type of videos, different topics. That's why click here, live, and you can see all our details. And right now we discuss trading patterns. Okay, so go here on our YouTube channel, and we have a lot of speakers. Okay, and today we discuss how to make money. You can easily make it. Take a look. We don't trade crypto, only reliable companies or index, American index, VO, because it's stable in all funds. They invest in this type of index. Take a look here. For example, can you imagine if you invested, let's say 10 years ago, here you literally triple your money. Not triple, even 4x, 4 times. What do you think? Is a good investment? Or another ETF, SMH, reliable companies here, and take a look max. If you invest here for $7 and then at 700, 100x. And SMH, it's semiconductor ETF. That's why subscribe, give like to this video. Yes, put in chat what stocks, what ETF or index did you buy and how much money did you make. And of course, Apple and all Magnificent 7. Can you imagine if you buy Apple for $1 and then you have 300? So instead of buying iPhone, just buy Apple stocks. 1,000. Can you imagine 1,000 here? And right now you have 300,000. Wow. You see? It was only literally $1 or $10 in 2012. $10 only. And then 345. What do you think? It's a good deal? Let's continue. And we're discussing patterns. Okay, today, how to choose patterns and when to buy. Let's discuss it step by step.
Good swings that give us
Subscribe,
price
give like.
action that signals a trend
Hi.
change after we had the long wick candle. Whereas here on this lower time frame on the right, we can see so much more data and see the actual swings of price. So what you had on this lower time frame was a perfect double top pattern that formed right at the key level of resistance and inside of the long wick candle from the higher time frame. So again, to confirm the reversal and the trend change, neckline placed here at the swing low, and once price breaks the neckline and makes a lower low, your trend change is confirmed from an uptrend to a downtrend. The breakout here is then when you would go to the lower intraday timeframes to take trade entries short. Now, going in the opposite direction, in a downtrend, this would work the same. So moving on to the next pattern.
Let's see next pattern.
The triple top and triple bottom pattern.
Triple top and triple bottom.
So before we continue, make sure you go follow our Instagram account @wise.
Let's discuss.
A bullish trend continuation pattern has your runs and pullbacks. The swing highs are higher than the previous swing highs. The swing lows are higher than the previous swing lows. This means a bullish trend continuation pattern makes higher highs and higher lows. From a price action standpoint, it shows a continuation of bullish momentum from the buyers through making new higher highs and new higher lows, and not a sideways market. Now, going
It's
the
a
other
bullish consolidation. Bullish trend.
way, a bearish trend continuation pattern has your runs
You see?
and pullbacks. The swing highs are lower than the previous swing highs. The swing lows are lower than the previous swing lows.
It's a
This
downtrend.
means a bearish trend continuation pattern makes lower highs and lower lows. So from a price action standpoint, it shows a continuation of bearish momentum from the sellers through making new lower highs and new lower lows, and not a sideways market. Now moving to the next pattern. The trend change pattern.
Subscribe, give like to these videos. Don't forget.
In a bullish market, there are two ways the trend change pattern can form. Variation 1. You have your moving uptrend through the higher highs and higher lows before price makes a lower low, giving you your trend change pattern in a bullish market. Now, variation 2. You again have your moving uptrend through higher highs and higher lows before price makes both a lower high and a lower low, giving you your trend change pattern in a bullish market. So from a price action standpoint, it shows a loss of momentum from the buyers as price failed to make a new higher high and instead created a reversal pattern.
But again, patterns
Now, going the other way.
not always the same and not always
In a
work.
bearish market, there are two ways the trend change pattern can form. Variation 1. You have your moving downtrend through lower highs and lower lows before price makes a higher high, giving you your trend change pattern in a bearish market. Now, variation 2. So you have your moving downtrend again through lower highs and lower lows before price makes both a higher low and a higher high, giving you your trend change pattern in a bearish market. So from a price action standpoint, it shows a loss of momentum from the sellers as price failed to make a lower low and instead created a reversal pattern showing a trend change from a downtrend to an uptrend. So moving on.
And we discuss all patterns now.
The head and shoulders and inverse head and shoulders pattern. So before we continue, if you are enjoying this video and want to, because price already made both a lower low and lower high, which shows a fully formed trend change, not just the start of a trend change. Now, going in the opposite direction. The inverse head and shoulders pattern starts with your moving downtrend. Left shoulder, the head at the swing low, and then the right shoulder at the higher low. The swing highs make a neckline or resistance level. So from a price action standpoint, it shows a loss of momentum from the sellers and the start of a trend change as a higher low has already formed. Now again, there is a higher quality inverse head and shoulders pattern, which is an inverse head and shoulders pattern with a slanted
inverse.
neckline. Again, it is the same as your normal inverse head and shoulders pattern, except you already have a...
And right now we discuss an example. Let's see. Member chiefs. Apple as well. Let's discuss what pattern do you see. Put in chat and comments, you see here. This is a support line, a resistance line, 317. Can it go up tomorrow? Is it bullish or bearish? Put in chat. Next, Google. Put here bullish or bearish. You see, what is it? Resistance line 341. Let's see what can happen tomorrow. Then SanDisk, memory chip stocks. Here again, you see sideways. Put in chat what does it mean, this long red candle. What does it show? A lot of sellers. You see? What do you think? Bullish or bearish? Will it go up or down here tomorrow? Yes, subscribe, give like to this video. Then SMH. Vanex Semiconductor. At closing was 561 and right now 566. Here, resistance line 567. Can it go up? Yes. Let's see tomorrow. DRAM. Wow, already 59. You see, aftermarket crazy up. And let's see silver, SLV. Silver is up because again, conflict with Iran is not done and huge demand for silver and gold. Wow, huge growth. Yes, subscribe, give like to this video and put in chat what stocks did you buy, how much money did you make. No crypto, because crypto is super risky. You can lose all money. It's better to invest long term. For example, semiconductors, because right now AI boom. Take a look. If you invest here, invest only $5 and then 100x, almost 700. You see? That's why I put in chat what stocks, what ETF did you buy, did you invest, and how much money did you make. Okay? Chat is open. Yes. I see your questions. Yes. Hi. Yes, subscribe. We have different topics and different speakers on our channel about stocks, real estate. I'm a realtor as well in US and Dubai. And how you can buy without any down payment. Then we have lenders, then insurance, marriage agency. If you want to find beautiful girls in marriage agency as well. That's why subscribe, give like, and go in description to this YouTube channel. You can find all topics that we cover. Okay, let's see. Magnificent 7. You can invest $30 and make 70. Good growth. And take a look. It's a bullish trend. Up. Okay. And let's continue.
Higher high that formed, creating
high.
the slanted neckline.
Let's see.
Now, from a price action standpoint, this is a higher quality reversal pattern because price already made both a higher high and higher low, which shows a fully formed trend change, not just the start of a trend change. So this then brings us to our next question, which is, how do we use the head and shoulders pattern as part of our strategy? Again, right now, go to the comments below and let us know exactly what questions you have and the second variation. A head and shoulders or inverse head and shoulders pattern followed by a neckline break, but instead of taking the breakout entry, waiting for a pullback entry.
Let's see.
So you first have your inverse head and shoulders pattern. Neckline here, neckline break. But instead of taking the breakout entry, there was a second long entry on the pullback to the new support level. Now, going in the opposite direction, this would work the same. So moving on to the third variation, which is an aggressive early entry at the right shoulder of the pattern. So your regular entry would be identifying the head and shoulders pattern and taking a trade entry short at the break of the neckline here. But now, there is a more advanced way to trade the head and shoulders, which is what we call an early aggressive entry right at the right shoulder of the pattern here. So let's break it down. You first identified the left shoulder and then the head. Now here's the key. The left shoulder here already makes a resistance level. So you would have had it drawn in and extended out. As price comes back up to this resistance level, you would wait to see if you would get candlesticks forming at the level created by the left shoulder, which you got through the multiple long wick candles forming at the level. Then, at this point, you would look inside of this area to look and see if you get any form of price action that signals a trend change, to confirm that this right shoulder has completed. So let's pull up a lower time frame, specifically the 4-hour time frame, and put it beside this one. On the left is the daily time frame we just looked at, and on the right is the 4-hour time frame of the same asset. This resistance level here is this same resistance level here. This area here where the candlesticks formed is this same area here on the 4-hour time frame.
Yes.
Now on the 4-hour time frame, you had a perfect
Yes,
descending
subscribe, give like
triangle
to this
pattern
video.
that formed at the right
Subscribe,
shoulder and
give like,
resistance
see